Good morning, everyone. Welcome to the On Time, On Target Morning Brief. We're investing fighter pilot precision on a daily basis. Today, we're going to talk about Palantir. And if you remember, I've talked about Palantir a few times over the course of the past year. Since last year on September 30th, they did their direct listing. Remember, they had a direct listing at $10 per share. The difference with a direct listing versus a traditional IPO or even a SPAC is that a direct listing, the company is putting its own shares out there, very similar to what I did for Anchorstar Wealth, is they set a price and then you unleash the initial shares at that price, and then it becomes a market-based price after all of the shares are out there. When you look at Palantir, started at $10 a share, it kind of flatlined for about a month, went up to $45 a few months into it. Excuse me. And into January of 2021, hit $45 intraday, closed around in the upper 30s. Now it's kind of settled back down through the course of 2021 into the lower 20s, but it does look positioned to go higher. Went higher 8% after market last night due to a news cycle where a news story where they they were awarded an $830 million contract. I believe it was with the Army. But if you remember the thesis, data is the new oil. Palantir is that company that is there to help you take oceans of data, sort through it into decisionable, actionable data. Really with the process of when I worked overseas in the Middle East for a year at a command center, that's what we did is all this data came in, flowed in through the floor, up through different cells into the major, chief of combat operations, which was a crew position. It was somebody sitting in a chair 24/7. Well, multiple people obviously doing shifts in that same chair, up through one, basically lieutenant colonel, usually post squadron command, lieutenant colonel, and then focused, built the brief. And then it would be a briefing twice a day up to the general officers as to what decisions need to be made based on all of the data points that came in. Well, that's what Palantir does. Obviously, that's very attractive, not only in the Defense Department, but in major companies out there have the same sort of thing. All the data coming in, and what do you do with it? How do you turn it into manageable, actionable intelligence, if you will? The only downside, personally, this is my own opinion, for Palantir is the executive pay. The CEO, I'm blanking on his name right now. I can picture him because he's unique looking, if you will, but has unique hair, if you will. But the pay schedule or the pay package that he took last year, I want to say it was almost $1 billion, and that's a lot of money. So you think of this entire contract going into the pay of the CEO, that to me doesn't fly as far as an investing long-term investing thing. It was one thing and done. That's one thing. But if you continue to do that year over year, I mean, how much money can they make to be able to pay that? Unlike others, like, regardless to what you think of Facebook, Zuckerberg's salary is $1. Elon Musk takes like $1 because they have to get paid something. But that's more of the mark of a mature organization versus the huge payday that the individual got as the CEO of Palantir. So I think it's a fantastic company, except for the pay. So you have to do your own due diligence before you decide if Palantir is right for you. But they certainly are best of breed. I think the stock does go higher, but I'm not sure it can go into that 10x, 100x thing with the pay package that's out there. All right, so that's what we're going to talk about is Palantir this morning. We'll take a look at the chart. The question of the day is on a 1031 exchange that's related to real estate. Most significantly wealthy folks, when I say that, I'm using over $1 million. That's arbitrary number, though. I know $1 million ain't what it used to be. I know I've heard that said before. But if you are into real estate, most people who have around $1 million also have a chunk of real estate, whether it's their primary home or an investment property, or primary that turned investment property. Well, if you get in the real estate business, one way to escape or at least temporarily escape the capital gains tax on properties out there is to use this 1031 exchange. So I will pull up some of the rules. It's easy if it's a business property, investment property, and you sell it and you buy another one. You've got 45 days to put a contract on it. You've got 180 days, to close on it. That's pretty easy. However, if you're doing it as a vacation home sort of thing, or if you're trying to take your business resident, your personal residence, and turn it into an investment home, i.e. you're moving out, you sell your house and want to turn it into a rental. There's different rules that apply when you do something like that. So we will take a look at those as well. As far as our long and shorts, the futures are down. So if you think Monday was the big gloomy, ugly Monday. Tuesday was like Tuesday, yay, Tuesday, went up over 1.5% yesterday across the board. Well, we're trying to give all that back this morning. So it's going to be a down, up, down sort of week going into the Wednesday today. So really those longs, Palantir, was long earlier. It's starting to sell off too. The other three I have listed up there are pharmaceutical companies that are, have different headlines out there, but they're all going higher. And then the shorts that I really like, TAK, which is Takeda Pharmaceuticals. They suspended one of their big phase 2 programs out there. You have Regis, which is RGS, got booted out of the small cap 600. And then the other two are downgrades for GoGo and X. GoGo downgrade to underweight and X downgrade to a straight out sell for U.S. Steel. So those are what we have in action. We'll take a look at those at the open, try to make some money on them. Allergy super bad here in Central Texas, so I have to try to drink this water while I'm trying to talk this morning. So I'll apologize ahead of time for that. If you're catching us on replay, please subscribe, hit the notifications bell as well. If you want to join us live, it's $25 to come into the room. What you don't see is a chat window and a Q&A window off to the side here. You can ask me anything and I will answer it real time. And with that, let's go ahead and get started. All right, welcome back. Here's our lineup card for today, Wednesday, October 6th. This standard disclaimer applies. This is a financial education presentation, so you have to do your own due diligence for acting upon anything you hear this morning, especially with a company like Palantir, where there's both ups and downs. Full disclaimer information is available at ototnow.com. All right, our mission objective is grow our money, protect our money, and live off our money. Again, this is to try to grow your money when you look at investable theses that are out there. One of the best ones I like is data is the new oil, right? Oil was the primary, that was where you could put your money and it was just going to grow and grow and grow. That was from the 80s, 90s, 2000, 80s, 90s for sure. 2000 kind of tech took over a little bit. But now that we're in the 2020 plus, it is data. It really is. I mean, and it's how do you manage it? How do you make decisions off of it? And Palantir obviously leading the way in that space. So how much should you have and what does the chart look like? That's what we'll take a look at. And I'll let you know my opinion once we do. All right, as far as our question again, that what is the 1031 exchange? We talked about that in the open flow today, long, short, open, so long. We're going to take a look at the around the world markets. We'll take a look at our own headlines, which are down, our own futures, which are down almost 1%. We'll pull out the charts for PLTR until the open comes around, and then we will execute the open and get back to the long-term stuff to close out. Contingencies and academic resources are standard. All right, where is the market overall? Again, this is looking at the U.S. market. This is the SPY. So the S&P 500 here is what we're looking at. Again, everything's in an uptrend, except for we're starting to break that. Now, the chart hasn't officially said the uptrend is broken yet, but it's getting pretty darn close. If today's a down day, I think that we may actually start seeing some negative trend lines starting to show up. Does it feel like it's been selling off for a long time? Yes, it's been selling off. The market has been selling off kind of for about the last month or so. And, that weighs on a lot of people. I know that's what I do for a business now. I talk to folks and put everything in perspective, but we're up here at 454. We're down here at 433. Again, you can, you think 10% off of 454 is 45. So around, you think correction correction 10% off is down at the 405 level. So we've had about a 5% sell-off. Obviously in tech, it's been a little heavier. So again, starting to get people's attention. I think I have my investment board meeting tomorrow night, where I will go over my long-term thesis for the rest of this year and going on into next year. However, yeah, I think we could go sideways into the end of the year. And I would not expect a huge move higher, especially not new highs in the between now and the end of 2021. When you look at the 5-day chart, you can see all the volatility up and down. Again, these are 1% moves basically that we've had over the past 4 trading days, right? So that's indicative of a market trying to find itself. So hold on, expect these big days to continue until we pick up either a trend higher or lower. So again, if you don't like the volatility, well, that's better than a trend lower, right? So here's how we have our chart set up for day trading. Again, we have the S&P 1-minute chart off to the left. You can see the gap down here, but kind of an increasing trend going into the open. So that's a good sign. And then we have three shorts, X, TAK, and RGS. We'll watch those at the open. All right, let's go over to CNBC.com. Here's our futures. Again, tech leading the sell-off, almost 1% down. Go over to Europe, over 1% across the board, so not as bad as Europe. Asia's mixed. Still 10 years creeping up, 1.522. Again, we haven't been over 1.5 in a while, so oil is again teasing around that $80 range. Gold and silver selling off slightly, and then crypto, of course, has been where the money's at. I mean, we were at 40 in Bitcoin 40,000 in Bitcoin when I said it's positioned for a good quarter 4. Well, it's moved up $14,000 since then. So quick math, what's that, between 25 and 30% since about 2 weeks ago when we started talking about that. All right, to the headlines today, you're going to see Palantir, Facebook getting hammered. Yep, that is going to continue probably for a while. I'll need to do a piece on to let you know my full thoughts. I was looking for the PLTR headline real quick, which I'm not seeing for the big contract that they got. But here's the 9-month chart. So again, if you take this to the left, Palantir started at $10 down here, sideways for about a month. And then here's that up to 45 in early February is where it kind of peaked out. It was kind of the hottest thing ever there for a while, sold all the way back down to below 20, and now it's hanging out at 23. So, this 6, 7, 8 days of a hard sell-off and now a good contract is positioned to go higher. That's why it's up between 6 and 8% this morning. When you look at the numbers, though, you're not going to get a dividend. It's going to be profitable within the next year. There's a little bit of people betting against it, but yeah, there's a lot of red in here, right? So there's a lot of risk, and again, the executive compensation is my number 1 risk for me, which is keeping me personally out of the name. But I do have a lot of investors in this name, and it probably does go higher from here. It just doesn't scream higher to 100, in my opinion. All right, I'm going to go ahead and switch over to TD Ameritrade here. I'll be back in just a second for the open. Good morning, everyone. Welcome to the On Time on Target play of the day. Here's the opening bell. All right, you have 4 screens in front of you. You have the S&P 500 on a 1-minute chart. You can see some positivity going in, but overall we are down almost 1%. We have 3 shorts in front of you here. We have X is US Steel, got a downgrade. They're down almost 4%. TAK is probably my favorite of this group, down 7%, and then RGS is already down 9%. Again, TAK is a pharmaceutical company that suspended a phase 2 project that they had going through. All right, 15 is the high of the day. So if they 10-cent stop, that would be 14.90 or so. Let's zoom out here a little bit. You can see it was all the way down here. That's why I do like it as far as setting up to go lower. So again, 15, we'll use a 10-cent stop. I'm comfortable taking here at 14.90 once it hits. And I think it'll hit here fairly quickly. All right. The reason you don't just grab it here is because there's not enough cushion between where it is currently and the upside. So you have to let it start its downtrend, which is going to hit right here. Actually, we're just being patient. Looking again for 14.90 short and then moving south from there. All right, RGS is a little harder. There's 14.90, so we're in the name short. We're covering up to 15, which is up here. And I'll get the down arrow drawn in. Draw our arrow here. And again, the risk unit, again, and this is defined as 10 cents. You've seen the market going higher over here. I gotta like that. But we're going short in this trade. So 15 is the high of the day. We're in at 14.90, your first risk unit. So again, you determine your risk unit by how much money you're putting in and how many shares you buy. But whatever you risk, if it's say $100, then you're in it to make 300, which is 1480, 1470, and then $300 would be 1460. But you're only risking the $100 to do it. So again, that's the math behind all of this. We'll zoom in here a little bit. So again, risking one, whatever that is, $100, $1,000, $10, $50, whatever it is, to make 3x that. So again, that's how all the math works. I like the entry into that trade there. All right, let's see what's going on. U.S. Steel market again going higher. That's good news. We'll switch over to long-term investing here in a second and see what's in the green. But we're going to stay on this chart for a while because this thing could stripe down to 1460 here in the next minute or two. All right, U.S. Steel is not really selling off too hard. RGS is basically falling off the cliff there. It's kind of harder, when you get down into below $5, you're having a stop that's like 4 cents, and that's a little harder to trade. All right, we'll take a look at some of the other shorts out there. GoGo is the in-flight entertainment. I think they have the contract for like Southwest. But if you fly on any of the airplanes that have I know it's crappy. I hear you without you even saying it, because I hear me saying it. Every time I'm on an airplane, the internet's crappy, right? But, you're also at 35,000 feet flying 500 miles an hour. So I try not to complain too much about not having my full high-speed internet in that particular situation when we never used to have it at all, right? Or at least I'm not in a car for 12 hours covering the same amount of distance. But the GoGo, again, they were downgraded to underweight out there. So that's what's leading to that sell-off, almost 10% now. And then that is it for the shorts. Turn around looking long. See how Palantir opens, since that's our topic of the day. So here's where it was. This was the last night. It jumped up, I think 8.5% was the highest I saw for Palantir, and it's kind of settling back in, right? So percentage wise, gosh, 3% or so off from where it was here, and then selling off right into the open. It is kind of a nice setup to go long, but the market would have to, I think, in order to turn around and take Palantir higher right here, look at all that volume, millions of shares. I would really need to see, again, you'd use about a 25-cent stops. You're kind of at that point, if you will, to take it here and go back higher, be out by the time it gets to 25. But I would want to see the market kind of screaming higher before I took a long into this current environment. All right, let's look at some of the other healthcare names we had out there. We had 3 of them. ONCT. They were gapping up there, not gapping up at all anymore. Basically sold off everything they gapped up there. CLXT. Same sort of thing. We're gapping up, but basically sold off all the way back to where they were. And then the last one, RDHL. Yep, same thing, even red now for RDHL. So that's why if you just need something to move for your trading plan, often these pharmaceuticals are your best bet because they're going to move, but they do tend to flop around all over the place. All right, so how are we doing in our trade? We're in the green in our trade. It's just kind of sitting there holding, not worried about it at all. I like the entry point and then the exit point down here at 1460. We're going to check back on that here in just a second. All right. So what's in the green? There's a handful of names in the green. You have Palantir, MSTR is your Bitcoin proxy. That's MicroStrategy. You have Ethereum, ETHE, and then the crypto ETF is CRPT. So again, largely the crypto plays leading the way into the green, and Palantir on their contract. All right, everything else pretty much in the red. Let's see how bad it is to the downside. That's a call up top for Apple. Not worried about that. Those move around 10% a day. They can. Upload, CRISPR Therapeutics, Zoom, Revive Therapeutics, Delta Airlines took a downgrade. I saw that. Facebook is still obviously going to be troubled. So I left Facebook for some folks, and with the intent of getting back in if it continues to sell off pretty hard. You look at Facebook, you have the ethical downside, right? And the negativity in the air with everything Facebook, alongside with the is the advertising dollars. When you have entrepreneurship is increasing every day, the younger generation is used to being on their phones and trying to monetize, build followings and then monetize them. Well, the easiest way to, again, advertise around your local area is through Facebook. So that's only going to get bigger and stronger, in my opinion, until something else comes along and invalidates it. But certainly TikTok is not doing that. It's not getting you that exposure. Advertising through Twitter, I think, is largely a waste of time. That's an opinion. And same thing with Instagram. People don't really want to get hit with those ads on those platforms. It was kind of funny, though, when you had the big 6-hour Facebook outage the other day, and Twitter tweeted out, hi, we're still here, even though Facebook and Instagram were down for like 6 hours. And then, people were making jokes with the libraries saying, hey, we're here too. Books are okay today. But again, largely, social media, Instagram, especially for the younger crew, that's where they reside primarily. So again, looking at advertising dollars going in and around that stuff, I just don't see anything knocking Facebook off their posts there. So you've got Google for all of your search engine ads, and then your targeted ads really through Facebook. It's going to take a change in technology before I think you unseat their ability to generate revenue. All right. Let's go back to the green side. So again, SPY hanging around that, even though there's some, up significantly higher than we were down here at 427, still off 0.5% on the day. Let's check back in our trade and see how it's doing. That is basically the same place. It just zoomed out a little bit. So again, 1485, we got in at 1490. We are short. There's the arrow showing that we're short. So we just got to let this sell off through the day. So we'll have to come back and check on it here in a minute. All right. Let's switch into our topic of the day, 1031 exchange rules. What you need to know. Again, this topic or this page is the Investopedia page. So this is where you start. Again, I like Investopedia because this is where you can get your kind of 8th grade reading level, breaking down complex topics into, words you can understand, if you will. Don't let that offend anybody. I'm just saying it makes it kind of easy to be able to get your arms around a complex topic versus going to the IRS code can be kind of a nightmare trying to figure out what they're talking about. So again, capital gains is what you're excluding here. So you're thinking real property, real assets, houses, right? Houses and land. You can also do 1031 exchanges with land. There's a little bit of a complexity if you buy land, then you develop it, i.e. put a house on it or whatever you put on it. But you take raw land and you put something on it, and then you sell that and try to 1031 that into another building. It's a little bit difficult because you're talking apples and oranges, and there's some rules that go along with that are changed. So they kind of make a joke in here. 1031, it's almost a verb, let's 1031 that building for another. Okay, it's not quite that common, but certainly if you're a real estate investor where that's your primary, then you certainly are more fluent in this than most of us who don't use it. I've never personally done a 1031 exchange. All right. Again, these are business and investment purposes. So you can turn your primary residence into a business once you leave it and rent it out, and then these rules apply from there. Exchange, a like kind exchange, no limit to how many times you can do it. And again, former primary residence under very specific conditions. So this does throw out the disclaimer. If you're using 1031 your first time through it, you probably need to reach out to a CPA or a real estate expert that's skilled in this to be able to make sure that you do everything correctly, if you will. Here's that depreciable property. Again, this is when you start looking at taking land, developing it, and then unimproved land. Once you put the building on it, you're going to owe some depreciation recapture, which is no fun, straight 25%. Tax Cut and Jobs Act of 2017 did make some changes to the rules. Here's your 45. So you have 45 days from the sale of your property. You must designate the replacement property in writing. Okay. So that means you just have to find it. It says, you can do up to 3, but you do have to close on one of them. So again, 45 days to find the property, 180 days to close. So that's the math you're against. And you think, well, that's not too bad. Well, it can be. Standard closing, was 30 days for a long time. But if you've refinanced or bought a house in the past couple of years, it's more along the 45 days now. So just because the industry, there's so much going on inside the industry, things are taking longer. So just realize those are the numbers that you're chasing there. Vacation homes have their own rules. So again, if that's your specific situation, not going to go into it here, but again, it was considered a loophole for a long time. And again, that's tightened. So make sure you know what you're doing. And then again, there's your personal residence rules. So bottom line, unless you are a savvy real estate investor, at least your first time, maybe even second time through, you'll want to get a professional to help you out with this. And again, I'm not qualified to do it. I can make you aware of it, which I'm doing today, but then telling you have to go to an expert if you want to actually execute this. All right, that's all I've got on that. Let's check back on our trade real quick. Up in R here. Again, we shorted at 1490, looking to exit at 1460. Again, I will update that later today with a video once it hits. All right, with that, we'll see you guys back tomorrow morning. Bye.